it's up to you.
Okay, cool. Well, welcome everybody. My name is David Lehman. Nice to meet you all. I'm with the law firm K&L Gates, and my partner Adam Kelson is on this call as well. So you'll see him hanging around, and so we're going to do this together. And what we're going to talk about is negotiating a term sheet, and the form of the investment that we're going to negotiate is a convertible debt. So the process we're going to talk about is a little bit about just 3 minutes on negotiation generally, because we do these start smarts and we don't really talk much expressly about negotiation. So we thought this is a good opportunity to sort of talk about that just a smidge. And I literally will talk at you for like 5 minutes on that subject, answering any questions you have. Then we're going to break into little groups, and we're going to go through the term sheet, which is in the chat room. That's going to one half of us are going to act on behalf of the investor. The other half is going to act on behalf of the company that's receiving the funds. And so we'll break up and decide in our little groups as to how we want to negotiate that. And then we'll come back and we'll have a negotiation on the term sheet with Adam representing the company, and I'll represent the money. We usually do it the other way, but we decided to mix it up, and then go from there. So that's the process.
So,
yep.
Are you going to be asking for a volunteer to role play, or are we going to?
We will. So we'll probably when we get into our group, we will ask for one or two folks to represent to be the client. The client being either in the one case the founders, and the other case the investors, and Adam and I will simply be counseling you as you enter into that negotiation. So think about whether you want to play that role. Are you in the mood to be really aggressive negotiators? Cool. Questions? So negotiating 101. And as I say, in the chat room, I think should be my sort of 10 or so negotiating tips, which I can't see because of my glasses, so I'll get those out. And the first one is that negotiations, as I say, that can't be rushed. It takes time. I find that people want to, particularly some clients, want to rush to the end, get to the bottom line. Here it is, what it is. And I find that sometimes it takes time to evolve. Sometimes you got to let it sort of fold out a little bit. You got to allow time to pass, and people will eventually sort of find a middle ground, but you can't rush it. I've had that happen. My second lesson is listen. And this is, if I'm going to make one pitch, it's to listen to the other side. I've told the story before about how a few years ago when we were negotiating a significant settlement of a piece of litigation, and I spent a lot of time with my litigating partners, and I realized the difference between litigators and corporate lawyers. And litigators like to talk, and there's a good reason, because as long as they're talking, two things are happening. One is the judge is listening, hopefully, and two is the other side's not talking. And so the goal is to keep talking as much as you can and keep it going, because you're accomplishing those two goals. When you're negotiating, you actually want the opposite. As long as the other side is talking, one of two things is happening. You're either learning what they're doing and you're learning more about what they are, or they're conceding. And I'll turn this off. Sorry. So listening and really learning, and not just hearing them out, but really listening to people's concerns. My most successful negotiations, I think, are the ones where we had honest and open discussions as opposed to posturing about what the real issues are. Because my theory is that if you talk to people enough and you get to the bottom line issues that separate you, you'll find that they're not as different as you think, and you can find some middle ground easier. So that's and you'll see part of that in this discussion today. The other part about listening is that is not to interrupt somebody. One of my least favorite things is when my clients talk over the other side as they're finding a way to concede. And I've actually had clients, and I've probably done it as well, I shouldn't blame them, but where I've stomped on the other side while they're conceding. And if there were a dumber thing in negotiations, I don't know what that would be. So again, listening and let people finish and talk is really a good thing to do. And the third one, it's sort of similar but related, is shutting up when you win a point. Much like my litigators learn when the judge is on your side, you don't talk anymore. I have seen people, when the other side concedes, keep talking. And in one case, actually talk them back out of conceding what they had just conceded. Again, pretty dumb. The people who work with me know that I'll move really fast. When somebody says, I agree, I'll say thank you and move on. I don't want to talk about that anymore. We're done, and move on to the next one. The next one is preparation, and there's really no substitute for preparation for negotiation. You should walk into that room knowing more than anybody else in that room, and as much as you can possibly know. Then you have a sense as to what you can do, what the other side can do, what the issues are. So the more preparation one can do, the better off you are. Some of this we're not going to be able to do tonight, but it's important just the other ways you do this. Communicating amongst yourselves is really important. And again, it's going to be hard to do that tonight. But you got to figure out a way to be able to communicate, because it's usually a team. You're not usually doing this alone. In my world, I have a client, but it could be a couple people in the same business people, and they need to figure out a way to communicate with each other. And I'm all about breakouts. It's okay to sort of take a break and go talk to each other. The one mistake that I've seen people make, well, many mistakes, but one mistake I've made is not being in the same room as your client when you're negotiating, or when there's a team not being together as you negotiate. I really don't care where the other side is, but if there's more than one of us negotiating on behalf of my side, I really want to be communicating, preferably in the same room with the client. Now you can do it. You can do that other ways now with video and all different things, but it's not quite the same because I want to have access to that mute button. I want to be able to toss things back and forth. I want to be able to look at each other. And so being in the same room with the person you're negotiating with is really important. During COVID, I had 2 negotiating sessions where we actually went into offices socially distant apart and negotiated, because I felt strongly enough that I wanted to make sure that the client and I were together during what was then a very important negotiation. Weird, but we did it. The number 6 is considering alternatives. It's really important to know going in what your alternatives are, and the extent you can figure out what their alternatives are. You don't want to negotiate to the worst, but it's good to know what your choices are. And I always tell people, don't forget about one of the best, which is to do nothing. If you don't have to do a deal, that's a good deal. And so it's important to know what doing nothing or your alternatives are. And more importantly, it's important to create those alternatives before you walk in. And it's really important to think strategically before, as to figure out, okay, have I set this up for having multiple negotiations? As an example, we're going to see here that the term sheet says, thou shalt not talk to others. Well, that's okay. I don't much care, because by the time I get to this term sheet, hopefully I'll have talked to lots of other people and gotten a good sense as to what my choices, what my alternatives are to this term sheet. We've done lots of fancy stuff about creating alternatives, alternative structures, or alternative transactions for people as they go into them. So that's really important. Long before you get in negotiation, that starts very early on, thinking about what your choices are and creating choices. I have a note in number 7 to take into account personalities, and that sounds kind of superficial, and maybe it is superficial. But I have seen people, there are different personalities. And I've seen where people sort of lose patience after a little while. So it's better to talk substance with them up front because they lose patience. I've had others where, frankly, people like to warm up. So you warm up with easy stuff and you get to harder stuff later. And so you need to feel out people's personalities in negotiations and see what their tolerance is for sort of length of time and different things like that. I have a provision regarding driving the agenda and the discussions. It's really important in your negotiations to drive it. And what does that mean? That means, as an example, in its most extreme, if you're a lawyer, the lawyer's in the room, you want to draft the first document, right? Because that helps you drive the structure and and you're working off of your piece of paper. If you don't have the choice in that, then you create an issue list and you list the things that you're going to talk about in the order strategically as you want to do it. Or you draft the agenda. Somehow, subtly or otherwise, you take control of the negotiations and the discussions. Then I have sometimes thought about, okay, then I sort of gear the discussion the way I want it. Do I want the hard things, the easy things, mix them? Sometimes I start with something easy that I'm going to yield. Maybe I don't, but just to think through how that's going to work, and you do that through controlling the discussion. Number 9 is making sure that you have the right people. This is kind of good, but make sure you got the right people. It's really silly to work with, to negotiate with somebody who doesn't have authority or equal amount of authority. And so they're going to, when you get all the way done, they said, okay, now I'm going to go to my boss, and the boss is now going to unwind everything you just did. And so you want to dope out early. Do people have the authority? Is there going to be another negotiation? How's the process work? And it's important to ask those things. And the last one is, it's a small world, small community. And so I happen to be on the side of not being a table pounder. That doesn't mean you can't be assertive. It doesn't mean you can't hold your ground. It doesn't mean you can't, but it means maybe you don't take the very last nickel off the table, because these people are people that you'll probably work with going forward. And so, just think about there's life after this negotiation with people in that room or looking along. And so you want to think about the bigger picture as opposed to just, and I don't have it here, but it's really important. Leave the ego at the door. That has nothing to do with this. This is about getting to where you want to be and getting a deal done in a way that you're comfortable with. If somebody else comes up with an idea, that's even better. If the other side comes up with an idea that maybe you've sort of alluded to, that's fantastic. It doesn't have to be about egos. It doesn't have to be ideas. It's about doing the best thing for yourself and as a client and et cetera. Let me start with Adam. Adam, do you have anything to add, complain about, whine about that I just said?
No, I mean, I think these are different times, obviously, and as you alluded to, in trying to negotiate things over Zoom and email and COVID is a little bit different than it might be when you could do things in person. But you really now more than ever need to really understand the lay of the land, evaluate what the options are for everybody, and ultimately remember the goal is to get a deal done that works for everybody and where everyone can be profitable and get something out of it. And if you come with that approach, I think that it's not about necessarily winning, or besting the other side as it is getting a deal that works for you and for them. Then I think that's the right approach. So,
questions, comments?
David, what about actually editing the document through the negotiation while you're in the room together, or do you prefer to sort of agree on the terminology and then volunteer to take charge as doing the edits to send it to the group later? So,
good question. And one of my least favorite things on this planet is group drafting. It's one of my least favorite. The only thing worse than that I've learned is group excelling. But that's only a very close case. Group drafting. I mean, it turns out that drafting is difficult because it's usually, if you're moving one word, it actually implications in the other part of the document. So I much prefer when I'm negotiating to say that as early as I can say I will take the pen and mark up the document and get to people the marked up document reflecting the discussion. And so that has the benefit of giving me the pen, so to the extent there's any ambiguity, obviously that ambiguity is going to get drafted in the favor of my client. So it is always better to take the pen if you can. If you have a situation, but you don't always have that ability, right? So if you don't, there's some tricks. And one trick is to say, if the other side's going to draft, okay, got it. That's a good idea. Why don't I send you tonight sort of a summary of what we agreed to on the key points. And that way I can get out ahead of the draft and memorialize the discussion in my words, right? So that's a trick. If the other side is going to take the pen, you beat them to it with sort of a little summary of the negotiation. A good thing to do, people like to do, and I think it's a good thing, is that as you go through the negotiation, it is a good habit to take a moment and summarize when you get to a point. We agreed to X. Some people like to move on to the next one really fast. And that moment is worth it because you find maybe they haven't quite gotten the clarity they thought they did. So sometimes summarizing it there is a useful thing to do. So that's my response to that. Great.
One of the things I would suggest is on the negotiation tips. Negotiations by nature, there's a presumption that you're going to come to an agreement, but not every negotiation consummates into an agreement. So I think it's really important to understand what your non-negotiables are, and have those clearly identified. So if you get to that point in negotiations and, it's an existential truth to your business and you can't change it, you just say, thanks for your time, but no thanks for the offer, and walk away. So you have any suggestions on, the adage is everything's negotiable, but the reality is there's oftentimes some things that are truly not negotiable or shouldn't be negotiable from an entrepreneur's standpoint.
Yeah, I mean, I'll give you an example. So Don, I think that's a really good point. And I mean, as an example today, we walked away from something because the other side insisted on personal liability in connection with the transaction. And that was a non-starter. There will be no personal liability, and this deal was a corporate deal, and he's not signing it personally. And if the other side says, so that's very nice, we're not mad or anything, the answer is no. We could talk about other kinds of collateral, but if you're stuck on that piece, that is a perfect example of what you're talking about. That is a line we weren't walking through. That's it. If that's your requirement, we don't fit in we need to part ways.
But presumably you have a list of those that are standard non-starters for you, right? I mean,
right.
You don't want to be discussing that, in the midst of a negotiation, with your team in terms of.
Agreed. Absolutely. And that goes to my point about preparation beforehand and having lots of dialogue among the team before you walk into the negotiation. Absolutely. I will say that.
Question.
Yeah.
A question. Can I raise a small question here?
Please, make it a big question.
So just hop on your point here. I have clients who once asked, there's terms obviously seems absurd for me, like the personal liability kind of terms that I would think that they should not accept. But the client will be so starving for funding or for business reason, they will ask me, is this common, or do you think any other company would accept it, or is it possible some other company would accept it? It's almost like can you tell me am I crazy doing this or not doing this? Like kind of almost sometimes a push into the limits that should I make that decision for them or not? Well, how would you deal with that kind of situation?
That's a really hard one. So I'll welcome other people's thoughts on this too. But it's a really good question. So here's a couple of things, and different lawyers have different approaches to this. I tend, and I think Adam does as well, tend to provide more, I'll call it business. That's really asking for business advice, right? And sort of saying, I mean, it's more than just saying, here's what the piece of paper says, and here's what the liability says, but it's going beyond that and saying, should I do this? What most people do? And I happen to think that that part of the value you get from a experienced lawyer or accountant or professional is the fact that they've been through a lot of deals and a lot of transactions and seen a lot of things. And so I actually think it's appropriate for a lawyer to say, in my experience, that's not typical or it's not common. Obviously the client has to do what it wants to do. But in my experience, that's not common. I will also say, I mean, I actually will say to people, this is not legal advice. I actually say this, what I'm about to say is business advice, not legal advice. If I were sitting in your shoes, I would not be doing this. And I think, I happen to think that not every lawyer will do that. And I'm not even sure every lawyer believes they should do that. But I think that there's incumbent on people to provide that additional advice, but certainly saying what your experience is quite appropriate. And actually, I think it's incumbent on people to do that. So that's what I would do with it. I also say, I never, ever, ever want to be in the position of saying, I told you so. Because as a lawyer, if I say I told you so, it means I failed. Because I failed to convince you of my point of view. So actually, I told you so isn't actually an appropriate thing. It means I missed. I failed because I didn't convince you of the right way. So that's my sort of take on it. Adam, you got a view on that?
No, I agree with everything you said. I think the other thing I try and do, I mean, I do give the business advice, and I will say if I were in your shoes, but I also try and provide context and say, look, I don't know your risk appetite, so something like a personal guarantee, it's like, I can't put myself in your position. It's not something I would do. And here's the reason why. But I think the point that you made and Don alluded to, as it relates to what's not negotiable or things that you will or won't do, having an understanding of what your alternatives are and where the lines are, and then you can come in and you can make those business decisions, and having that discussion ahead of time, understanding where your client sits in their circumstances is a huge bonus in that situation, right? So what should I do? Well, what are your alternatives, right? And then you can almost, without necessarily answering the question, you can lead them to make the decision themselves. But ultimately, that is the place you want to be. Is it is still their call. It's not your call. And even if you were kind of gently nudging them or even chugging them to the right place and getting them across the finish line, you want them to be the ones making the decision, and you want to give them as much context as you can. So you can't be afraid to tell them what you would do if you were them. You just have to make sure it's very clear that it's not telling them what to do. It's ultimately their decision.
I have to laugh because when you talk about context, I do tell people, because we deal with people that, obviously entrepreneurs, starting businesses, taking a lot of risk. And I always say, you need to take this from the gray-haired guy who's been at the same law firm for 35 years. That tells you my tolerance for risk. All right, but that was a good question. Other questions?
I have a question in terms of, given that it's focused on tonight is talking about negotiating a capital raise. In that context, one of the key things is when you're negotiating the elements of the terms, is if you change them from what you prepared to analyze, and hopefully you've done sensitivity analysis as part of your preparation, but what if the other side proposes something else or a combination of two things you hadn't looked at before? Is it appropriate to basically have your financial model there and ask for a break and then just spend a moment to try and see if you can assess the financial impact of those, or is that too distracting from the process?
Well, I'm a huge proponent of breaking and taking a deep breath and doing that kind of analysis. I don't have any problem with that at all, and indeed I would encourage it. And so, and some people take the view that it breaks it and all that. I think that you take breaks along the way, and you make sure that you understand what you're talking about. And frankly, if you have to break and say, let's revisit this tomorrow, you do that. That's much preferable than entering a negotiation and talking about things you're not certain about, or at least comfortable. That uncertainty is not really the threshold, but making sure you're comfortable with the numbers. And that's the most of all of them. That's the one that's most important. If you're taking a different approach than you were, and we'll take an example of let's say preferred stock or something, and there's a preference, and so you come up with another formula to figure out a cap or whatever it is, and a different conversion or something fancy, and you don't yet fully understand or comprehend the financial or the financial impact of the decision you're making, you need to take a timeout. Absolutely. I don't want to be in a position but by the way, once you go, you can't backpedal. It's really hard to backpedal.
And I guess I would also add, I can't imagine anyone you want to do business with not respecting that decision. If you're not in a position to evaluate it and you need to hit pause, or they're saying take it or leave it, or they're trying to leverage a situation, that tells you a lot about the person you're negotiating against. To David's point, you just never want to be, it's okay to ask questions or try and flesh out things that are, may be helpful in doing the analysis to keep make use of the time you have and being together. But if you don't have the appropriate time and the information you need to make the decision, you'd be kind of foolish to continue negotiating around something that you don't fully understand to the extent that you're capable of.
Can I ask a question, please?
Mm-hmm.
Sure. What sorts of resources or books do you recommend for founders to look at before, like while in the middle of negotiations and things along those lines?
That's a good question. Adam, you got anything on that one? Because I'm not sure that I have.
Despite that I have books behind me, I actually don't really have a great answer on that one. I think there are general negotiation tips that are out there, but every situation, at least in the early stage and for founders, I think is very different. I've represented companies that had no money and, all different types of negotiations, as has David, and, leverages can be perceived and can be real. And so I think it's a very facts and circumstance kind of situation there, and that when you're starting out. So I don't have a real good answer for a resource. I don't.
I don't, which is why I bumped to you. I mean, I guess I would be inclined to, if you're doing a capital raise so there's lots of articles and things on convertible debt. There's lots of articles about venture capital. There's lots of articles about preferred stock and those kinds of things. So I think rather than a book, I think if you go Google, I mean, it'd be glib about it, but I think there's lots of resources you can get on that.
Your mentors.
Pardon?
Talk to your mentors.
Yes, thank you. Yes, yeah. But there's lots of. I mean, the point is, I want to be more. It's not just about raising capital. It's about looking at the specific kind of transaction you're talking about and getting and learning about that kind of transaction. Is the way I guess the thing. So if you're going to do, for example, a preferred stock, there's no point in learning all the ins and outs of convertible debt, as an example. If you're going to do a merger or an acquisition or a license, go figure out, go learn about that specific transaction.
Thank you.
So I'm going to say this because David and Adam have trouble with that. Make sure you have an experienced lawyer that really understands this and has done it before in lots of different times. There's no substitute for that. And really good lawyers will kind of explain it to you. They'll kind of educate you because everything is there's a lot of similarities, but there are also subtle differences. So.
Yeah. All right. Is it a good time to sort of break into the group, into the and so you all have next up is we're going to go into our little our sort of side groups. Look at the term sheets, figure out what we want to negotiate and not negotiate. The term sheet you have in front of you is the one that was presented by the angel group to the company. This is a company that was created to commercialize a software that helps bowling companies, bowling and other sports. And you'll see the term sheet was put on the table by the angel group. And so this will be the first negotiation they've had on the term sheet. And so we will break into two groups, as I say. One will go with me to the talk about on the angel side, and the other will go with Adam on the company side. Kit, do you want to split this in some fashion, or you just want me to do it?
Oh, I got him.
What's that?
Tiffany's divided us up, and she's going to send us into our rooms.
Oh, all right, then I'm okay. Yep.
So, but what we do need to do is talk about what time we want to get back together, because Tiffany then will send out the thing and say, well, you get one more minute, and then she'll bring us all back. So
Adam, I'm thinking, because convertible debt, not the old preferred stock thing, I don't think we need a long time.
No.
What do you think?
I think we could probably like 20 minutes, 15.
Yeah, we're the same. Let's call it at most 20 minutes.
Okay. All right. We'll see.
All right.
We're quick.
That was so skeptical.
Well, we have never done it in the time frame because I was the one trying to get the teams back, get you all back into the room. But we'll see.
Yeah,
maybe we're a little more
this time we
efficient.
just have to push a button and everyone comes back into the room. So
There's no choice.
There's nothing we can do. That's
Okay.
it.
All right. All right.
Can I finish asking my question, Adam?
Yeah, go ahead. Sorry.
So my question was kind of like, if there's a potential lead, like how do people, like are you able to soft circle and things like that? Like is that sort of good practice, or to what degree of confidentiality is required?
So again, I think it's a little bit of nuance. If you haven't signed an NDA, and it depends on who that person is. If it's, hey, I'm thinking about taking money from Innovation Works or from a government entity or an incubator or a program where they haven't told you that there's confidentiality around it, and it's not for certain, and there's not as much downside to communicating that because it's not political in the sense of whether you will or won't get the money. Then you might do it. But short of that, I think you want to be really careful about saying I'm getting a term sheet from so-and-so, because again, it's a lot until you have it, or until you have a commitment, a lot can happen. I think you want to be as respectful of confidentiality of your potential investors as you would of your existing investors. David, I don't know if you have a different view, but
That sounds right.
Thank you.
All right, well, welcome back. I guess let me introduce you to my clients, Snow and Dawn, who will be taking the lead on negotiating. But we thought we actually put a reasonable term sheet in front of you. So did we want to sign it, or where do you want to go with this?
yeah, we're going to probably have a few comments we'd like to talk about.
Again? Okay.
Yeah.
Yes.
We keep doing the same dance every year. So we have our lead is Logan, wherever he may be.
Right here.
Screen. Sorry, my Zoom gallery mode needs to be changed here. Do you want to? I guess we're just going to walk through, and maybe we can talk about some of the things that we really want to see change, and maybe just take it bit by bit, point by point, and we'll go from there.
Could we maybe ask that we sort of hear the economics as a group if there's a bunch of them or something, as opposed to just point by point?
Sure. We could do economics as a group. So, Logan, I think what we want to do here is talk about interest rate, conversion discount, and valuation cap, and we'll call that the high level economic points for the purposes of this discussion. Does that sound about right, David?
Mm-hmm. Sure.
All right. So should I just start?
Yep. Just throw out where you think we ought to be and why on interest rate, on the valuation cap, and the conversion discount.
Okay. So first and foremost, I think the interest rate for us right now at 10% is just a little bit too high for where we're at a company right now. I really believe that we could find something that's more our level, maybe like a local accelerator that would give us a little bit more resources and a little bit more of a helping hand for a lower interest rate. So 10% really just doesn't make too much sense to us. We'd really like to see it more down towards like 6%. I think that's probably where we're at this company right now. As for the valuation cap, we would also like to see that expanded a little bit. According to our metrics, we see ourselves around maybe like $5.45 million. That's our valuation. But, I really want to make sure that we're keeping this fair. We want to make sure we're playing fair on both sides. I would round that down to about 5 million. I think that's a very fair adjustment, up from 2, down from 5.45. Obviously, we want to get a little bit higher than 2. I just really don't think that is very fair for where we're at. The next problem, not necessarily a problem, but it was a little bit, it seemed off-putting to me, was the 30% discount on that next round. We'd like to see that around 20% because like I talked about earlier, we're at a certain point in our company that we really want to make sure we're doing all the right steps. So we want to be right at market price. We have determined that 20% is market price. We don't want to go anything above that. We want to keep our records clean and stuff like that. I think another, I don't know if this one was included, but I did have a problem with it. Was the 2-year, huh?
Go ahead.
Oh, it was the 2-year non-compete. I'm going to be real with you guys. I really can't put myself into that. Oh, it was 3?
Yeah, it was 3. I tell you what, let's just take a pause and let's talk about economics. I think the only other relevant point that we wanted to raise was the maturity date as it relates to those economics. Also, 1 year is just a non-starter. Like we're going to need a little bit more runway.
So
why don't we pause here?
Why don't we touch on them one at a time? I can't remember all of them concurrently. So let's just start with the interest rate. Our investors are pretty grouchy and specific, and they like to see some kind of return. 10% might be a little bit rich. So why don't we compromise on 8%?
We can do 8%.
Okay, done. Maturity date, what do you think would be a fair date?
We're thinking more of a 5-year maturity date. That's kind of the standard where we're at right now. What were you guys thinking?
That means that you won't do a Series A for 5 years. You're going to be asking your investors to be very, very patient. We're patient, but 5 years might be a little bit much. Why don't we say 3 years?
3 years. I really don't think that'll work for us. That's a little bit too soon. Like I said, we want to make sure we have a little bit of cushion, right? So how about 4 years?
Okay, it could be. Okay, we'll put 4 in there, but the conversion could take place sooner if you guys do a Series A before that date.
Like 4.
Okay, next.
Which one was next? Which one do we do?
I think probably valuation cap is up next, Don.
Okay. So we're willing to be somewhat flexible on the valuation cap. But essentially the valuation cap is it's kind of a sideways way of creating what percent of ownership that your early investors are going to get. If we invest more than 250, we're willing to adjust that cap a little bit. But we think
How big is a little bit, though?
Pardon?
How big is a little bit, though? That was kind of ambiguous.
Well, I think we're willing to agree to some type of mechanism to increase it based on increments of increase in the proceeds.
So could you get a little bit more specific with that?
So let's say our group really likes your product and we want to invest more than 250, so if we cobble together 500,000, we'd like to see the cap, you'd like to see the cap raised a little bit.
Right, proportionally.
Yeah, it keeps our interest, so we're willing to do that.
Is there a number you're targeting, Don? Your group?
Well, I think we should come to an agreement. We don't have to do it right now, but what would a $500,000 investment look like on a cap? I think we can work out a fair number.
Can I just make a comment? This is where the Adam and would actually pause and Logan would end up pausing and going to private, putting their stuff on mute, right? You would kind of step out of the meeting for a bit.
That's right. We would talk about it and we'd say, okay, what are we realistically amount of dilution are we prepared to suffer in this round? And on a $500,000 investment, that's not insignificant. It can get you a certain amount of distance. And so let's just say hypothetically we came back and said a $5 million valuation cap on 500,000 seems about right to us. And
yeah,
I don't know.
I kind of felt that as well. That break.
Okay, so are we on to conversion discount?
We are.
Yes.
Okay, so share your thoughts again, Logan.
We thought 30% was too high. We have determined through our research that 20% is what we see in the market today. So we'd like to see our number around that 20%, give or take 1 or 2 percentage points. I mean, if we're doing a fair deal here in every other aspect, I don't know why the.
Well, we want to be fair, but our due diligence team felt that this was a really high risk venture. So because of that high risk, we'd like to see a little bit more incentive to help you raise more money by increasing that a little bit. We agree that 20% might be more customary. But for a high risk deal like this one, we think 25% is fair. We'll come down from 30 to 25.
25?
Right.
How does 23 sound?
My battery's running low. You might have to take over my.
You lowered
Okay.
where your interest rate would be, which would be your guaranteed money. So that kind of shows us that you have at least a little bit of confidence in us going forward. So I really don't see why that it's different with this point as well. Do you think we could get this down to about 23?
I think time is also money here, since we're investing you in a very early stage. The time expensive. Well, the earlier the money goes in, the more expensive it is. So I think we already considered from 30% to 25%, which is a big conceding. Shows our confidence and shows our our beneficial gesture for you guys. So I think you should talk with your team and see if this is a good number for them as well.
Okay. Team, do we like that? Sidebar? I don't know. We'll take it.
We'll be back. We'll
My
be back.
charger. Snow,
We'll take
you,
it. We'll
you
take
take
it.
over, Snow. I'm going to get my charger.
Okay, yes.
We'll take
That
it.
was nicely done, Snow.
Yeah.
And I like, by the way, just as an aside, one of the things that I joke about, but I mean, there's nothing I enjoy more in a negotiation than an awkward silence. There's nothing like just sort of staring at the other side. After you, for example, when you say you're, whatever percentage you're going to say, and then let them squirm and think. And you would be amazed how many times they'll sort of negotiate themselves down when if you just put it out there and just be quiet. For what it's worth. And that was a perfect opportunity to do that, and you did it beautifully. All right. All right, so that's that piece. You guys want to go think about that one? Is that right?
We're going to think about the entire economic package, I think, and we'll circle back. But yes, I think we have a few things we need to noodle, and
It felt like there were a couple of them actually got to closure.
we have a few. But it's a package, David. As you said, we want to do economics in one.
Well, but
Valuation.
again, if some of those are going to get redone, then the whole thing gets reopened, right?
Yeah,
Just to
we'll
be
just
clear.
keep retraining.
Yeah, I mean, that's what that's what we're going. I just make sure that we understand that.
Yeah, we're on
All
the same page. Don't worry.
All right. Do you want to go to other issues that you may have, or maybe you're okay with it? Otherwise,
Logan, you want to raise the other things that were problematic?
Yeah. I think it says here that we have to pay your legal fee. Is that true? Is that something you really wrote down?
Yeah, it's customary for the
beautifully done.
borrowers to pay for the legal stuff.
Well, I mean, like I mentioned earlier, we're in just such an early stage that we're trying to get capital from you guys. So it really just doesn't make too much sense to me
Well,
to pay your
maybe
legal.
some context would be helpful. David, have you
Yeah,
agreed to do this on a flat fee of $500?
I agreed to do this meeting for a flat fee of $500.
I just wasn't sure. I mean, I think if we had a sense of context, I mean, I think that would be helpful. But generally speaking, at an early stage and with the amount of proceeds here, I'd say we would not expect to pay legal fees for an angel group in a note round like this. But if we were to reimburse, it would be for a very low amount.
Well, I don't have a problem with. It's my experience a little different than yours. My experience is that it is fairly typical that the company pays some of the legal fees associated with this. That we expect to basically it's a way for us to get equity in exchange, or the note in exchange for the legal fees. But we understand your concern regarding sort of not going crazy with the legal fees, and so we're happy to cap it at some amount that we'll agree upon that'll be reasonable.
Okay, so we'll revisit that point.
Yeah, what the amount of the cap.
Yeah, the
Okay.
concept is the cap.
That sounds good to us. Let's see. The 3-year non-compete clause here is a little worrisome to us as well. Are we pretend we're not negotiating? We're in year 1, correct, of this company? No.
I think that feels right.
Yeah, that sounds about right. Yeah.
Okay, back into it.
Yeah.
Yeah, so I can't put myself into this position, right? A 3-year non-compete. I mean, realistically, companies aren't making money for the first 2 years, even into the 3rd year. It's really just my neuroticism here kind of spiking. If you were to find a better way to produce this product at a lower cost, and you left around that 3rd year while we're still not making money, we're gonna get decimated, right?
Yeah, so look, I don't want to jump in here. I think on this one we're kind of maybe have two different issues that we're conflating here. This one, I think on the 3-year non-compete for the employees, if the employees leave the company and they have to be unable to compete for 3 years, That's just a term that's too long. Frankly, it's dubiously enforceable, and so we'd be looking for something more a little standard that's a little bit lower, so that you have the ability, as I don't want to put words in your mouth, but I think you want to have the ability to go, if for some reason you can't be with this company going forward, that you can continue to operate in this space where you make a living, and given that you put your heart and soul in, but it's where your education was as well. So I think on the non-compete, we're looking to shrink that up into something a little bit smaller. And then, David, I guess we're a little short on time, and I don't want to cut anybody off. So, but I think probably the only issue that we had left was the board seat that we really wanted to talk about. One other big issue that was out there. Logan, if you want to hit that one.
Yeah, so we really feel like $250,000 is just way too low to get a board seat in the company, especially if we're going to be going on to take on later funding. That's going to be a lot larger than $250,000. We would like to reserve our board seats to be as almost effective as possible and have the most skin in the game. So we really don't feel comfortable having someone as in a board seat with only $250,000 of skin in the game, because it sounds like a lot of money, but realistically what we're getting after here is we're trying to be, we're valued at 5.45 million as a quarter.
I think we could accept a board observer position.
Oh, we could do a board observer.
Okay, done.
That's more of our speed right now.
Done.
On the non-compete, our concern, why don't we differentiate between you, Logan, the principals and the employees? I mean, certainly 3 years for even key employees is probably a little long, and we could talk about shortening that. And we could talk about the scope of the non-compete for the founders, but we are concerned about, and I suspect your next round is going to be concerned about putting money in and having the founders run around and compete with the business. And that's pretty important to us. And so, we can talk about, the scope of that non-compete, but we can't have you leaving the company and competing with the company. And so 3 years in that context for the founders we think is fairly reasonable. For other employees, if you want to move it to 2 years or something, Adam, that we can talk about that. But for the founders, we're investing in you, and we don't want to. I mean, we would look really silly put $250,000 or $500,000 if it's going to be in this company, and then 2 years later you're setting up a competing company.
Okay. We totally understand that. We totally respect that. I think Adam and I are going to want to take a sidebar on that. Talk about that a little bit more. But I do understand where your concern is coming from.
Yeah.
Cool.
Well, I think that's all the high level issues, and so we're probably going to need to take some time, and maybe we'll take the pen and mark it back up and give you our thoughts. But in fact, we'll even send a summary email and then take the pen, and then we'll also do that. What do you think? So
he learns fast. Cool.
I'll never tell you I told you so, David.
I know.
One piece of advice I'd like to offer all the entrepreneurs on the session today, when you go into negotiations, you want to be confident in your company. You want to be assertive, but you don't want to overplay your hand. One of the questions I get asked a lot is, Bluetree just like Shark Tank? And that question annoys me, so I've started answering it's exactly like Shark Tank, but the reality, it's nothing like Shark Tank except the really well-polished pitches. It's really more like American Idol. So just keep this in mind. When you come before Bluetree or other angel groups, we're not just looking at your deal or this term sheet. We're going to be looking at 3 to 4 companies a month to consider which ones we'll be investing in. And the next person on stage after you is going to be Kelly Clarkson or Carrie Underwood. So, you really want to be very flexible and not overplay your hand. You're competing for capital in a very competitive environment. There's lots of great startups in the area. So just keep that in mind where you want to be flexible, you want to be positive and confident, but no, just don't overplay your hand.
Right. So on that point, I wonder if coming to the first negotiation on the convertible notes, raising the point that you worry about non-compete in about a few years after your company, is that a really good first impression? I mean, the non-compete sometimes in different states not even enforceable. And it's also related to how you assign your intellectual property to your company, how you control your technology. So raising that point, lump that negotiation point into the convertible notes is, in my personal opinion, is not a very good first impression at this time point.
So I think I'm a little bit confused on the non-compete. Why would we want a smaller non-compete deal rather than a larger one?
The non-compete protects you. I mean, it protects the investors because, let's say one of the co-founders for your company decides to split, and without that non-compete, he can take all of your trade secrets and start competing against you directly.
Well, right. Why would it not be something that's larger than 3 years? So like why wouldn't we want like
It's not enforceable.
Well, it's a couple. Let's start. Two different questions inside that. The first question is we. Who's we? And so you as the founder want a shorter non-compete because if it doesn't work out, for example, you lose control of your company and you leave the company, you may want a shorter non-compete so you can go start another company or do something competitive. So from your own personal perspective, you may want a shorter non-compete. The company wants a long non-compete in order to protect the assets of the company. So those are that's the tension. You are there as a legal matter. There's a layer on the enforceability of a non-compete and the length of time that's enforceable. And for example, in a 5-year non-compete is generally at least, and it's a state-by-state kind of thing, but I'm going to make a generalization, but at least in Pennsylvania, a 5-year non-compete in this context is unlikely to be enforceable. It's very long. The only time a 5-year non-compete usually works is if you're selling a company, and you can usually get it in that context. In this context, I think 5 years is extraordinarily long and difficult to this term sheet has 3 years, which for a founder is at the highest end of the potential enforceability. Usually in employment agreements, you see 1 to 2 years. It's sort of what you would see as sort of enforceable.
So would that be a good way to set the tone? If you're really confident in your product or your brand, you're very confident for that personal non-compete to do it a little bit on the higher end at like 3 years. Would that kind of set the tone for the meeting, showing that, hey, we're very committed
to this.
Yeah,
yes, I think it does, and your attention in that, and I think Snow's comment is well taken, which is if you're concerned about it, you ought to think about when and how you raise it so that it doesn't look like you're heading toward the door and sort of so you're taking their money with an eye toward the exit door. And so think about when you raise it and how you raise it. And so I thought her point was well taken. And maybe it's a side note saying, my lawyer will be in touch regarding the non-compete and the details. And you may decide that maybe the better part of that negotiation will be the scope of the non-compete as opposed to the length of the non-compete, which is if it's narrowly based solely on bowling or whatever it is in this thing, maybe that's okay. If you're talking about developing a business and a software business, that's a harder problem. So you might focus on the scope of the non-compete as opposed to the length of the non-compete.
Okay. Yeah. That makes sense.
But I thought Snow's point was well taken, which is this may not be the time to have that discussion or raise it.
That makes sense.
Other questions, comments, thoughts, complaints?
I have 2 complaints. Sorry for later.
A different call.
I do have to probably call it here at 6:30. Folks are getting hungry downstairs. So,
All right. All right. Anybody else? All right. Thank you, Adam. Actually,
Yeah,
and
thank you.
thank you all. If that's, feel free to reach out to us if you have questions. Thank you all for participating. Thank you for our participants.
Yeah.
And we'll hopefully see you in 2 weeks.
That was
Thank
awesome.
you.
Thank you guys. I appreciate it.
Thanks.
Bye-bye.
Bye.